Hi, I am Jeffrey Wernick. Welcome to another pod shoot. I'm very happy to welcome back Eric Yates and Korok Ray. I also want to say is that I might have to mute myself periodically because I have a bad cough. So I hopefully try not to be so intrusive with my cough. I always like to start off giving some frame to these conversations. Um, President Trump, as one of the many things he's referred to himself as is as the crypto president, um, and so I would like to get Korok and Eric's take on how how they expect the industry to evolve with the perspective that Trump brings to the crypto area versus what the approach that Biden had taken, and with Kamala Harris never really clear about. Well, she was really never clear about much, but so, but and the way I compartmentalize this, first I have to say is I am a fan of Gary Gensler. Okay, so why am I a friend of Gary Gensler? Because I think Gary Gensler was right that Bitcoin definitely was not a security, but there's a question to whether everything else was a security. So I think the SEC actually during the Trump administration provided guidance on what is not a security, what's a utility token, and the guidance that the previous Trump administration, given on somebody who supposedly was crypto friendly, Clayton, was that a utility token is a token that the money raised is not used to actually build, the infrastructure, but it's the currency that used inside the network once the network is built. So it's not for fundraising purposes. So that was one criteria. The design of the token had to be a design of basically to be like a stable coin. It's got to be by its design. Its main utility should not be through the speculation and trading of it, but its use inside a network. So the other thing, so to be a utility. But if ultimately it functions, its main function was as a speculative asset, then it's a security. So that was pretty much Gensler's explanation. That was originally the guidance of the Trump administration's previous term of what a utility token is, and I think Gensler, basically agreed with that. Now, while I think Gensler was a good guy and did the right job, it's not that I like the SEC. It's that he has to do what the law instructs him to do. He does not make the law; he enforces the law. So I think Gensler enforced the law as the law contemplated it should be enforced. And to me, everything other than Bitcoin, it's questionable on whether they're security or not security. And we do know people used white papers and they used the funds to build a project. And the guidance they were given was if you're using the money to build a project, you're probably a security. And people decided to ignore that guidance. So you would ignore the guidance from the SEC at your peril. So, for me, the problem is the SEC. I would abolish the SEC. I wouldn't put a crypto friendly in. I'd get rid of the SEC. So I would completely deregulate everything, and I would let people issue securities without any barriers to entry. So, instead, where we seem to be going is we're getting regulation that'll give crypto a maybe privileged status, but we don't really know because they haven't fully chosen a team yet, and we don't really know what regulation they will propose. But I think there's an expectation that the environment is going to look a lot better for crypto under Trump than it would have been under Biden. Except I'm unclear on whether that's true for Bitcoin, since Gensler was pretty adamant about the one thing he was sure of is Bitcoin is not a security and not subject to SEC oversight. So as that introduction and anything that Eric Korok, if you disagree that what I said, feel free to voice your disagreement with what I said, and then go on to the question is given both of you are actively engaged in Bitcoin and in crypto, How has your life changed as a result of Trump being elected president?
Yeah, so on the token point, I don't think that there's anything novel or new coming under the sun with these, token constructs. You're effectively just creating a cryptographic signature to represent something, and those could be securities, different types of securities, different types of structured products. There's all these different ways that you can use a cryptographic signature to represent a familiar financial construct that's been created before. And then I think outside of that, when you get into utility tokens and a lot of these like network incentive type constructs, the quickest answer to most of those is, well, why don't you just use money for those things? And I think the answer is why these projects don't use money itself is because it's expensive for them to do that. And if they can issue something and try to attribute some form of moneyness to it, at least in the short term, then there's some degree of seigniorage they can extract out of that over time. And eventually the trend is pretty clear across all these products that they're going to continue to trend down. They're going to continue. People are going to realize that there is an actual moneyness to this thing, and that the reality is really they're just recreating some sort of loyalty point system, or airline miles, or ticketing, or something that requires arbitrary barriers to be set up for it to have value. And I think like airline miles is a good example. Like airline miles have value, but that requires an oligopolistic type system around it, and it requires closed control over the asset itself. When you try to trade these tokens in open markets, and that's when everybody realized what the fundamental value of it is. It only makes sense for a company to be issuing airline miles when they can artificially dilute its value. You can't go trade it in secondary markets, and they can determine based on their own partnerships who you can go trade it with. So when you apply these things to open markets, my argument's that I don't think you're going to find sustainable value there. I think that the only sustainable value you'll find is by just actually using money. But then you have to go raise that money, and that's a lot more expensive. And there's an opportunity cost to that capital. And that's why you never see any of these projects using that. It doesn't mean that I don't think the representation of assets with the token isn't a very valuable construct. And I think that there's going to be significant amount of tokenization around that going forward. The Trump administration and, Wall Street incumbents that are going to be pushing that, that's going to proliferate in a very seamless way. The question is, though, it's going to be very hard with the ability to, if everybody gets on a standard of exchanging similar cryptographic signatures, then how administration is going to be able to apply regulation to that type of a system to the same degree they have on our current is going to create quite a bit of tension. And we might have, Larry Fink might be able to have them in their pocket and they might set things up. But I suspect that the ultimate outcomes from a regulated version of a construct that was intended to have open and free markets is not going to end up exactly where people think it'll end up.
Okay, I'll give you a short and a long term. My short and long term prediction. I think in the short term we'll probably see a confusion between crypto and Bitcoin, as sort of as we saw in the last cycle, because the policies are not very Bitcoin specific. They're more crypto generally, and so the crypto industry as a whole will probably grow and boom. There'll be more grift, more meme coins to come, probably more innovation. I will say, so I'm pro innovation, and I'll say that in the long term, what I expect to happen is my personal opinion is that all these other coins are inferior to Bitcoin, and that their value will all converge to zero, and the best technologies will move on to Bitcoin in some way or form. Whether that'll happen up to the within this second Trump administration or not, probably not. But eventually, that is my ultimate prediction. Probably my controversial opinion here is I am not a fan of the Bitcoin strategic reserve. I think the majority of the Bitcoin community has rallied around it. If the government does have a surplus, it should return that to the taxpayers and not to use that to invest on its behalf. Because the problem with the strategic reserve is the government is then essentially taking a position on an asset. The very idea of decentralization is that should be in the hands of individuals, not central authorities. So I'm not a fan of any kind of crypto strategic reserve, not even a Bitcoin one.
I couldn't agree more. I had a tweet about this when they announced the sovereign wealth fund. Like, oh, you guys want to start a fund? You have 39 trillion in debt. Nobody who has 39 trillion in debt should start a fund.
Right.
So, Eric and Korok, I agree wholeheartely with you. I've been on record as being strongly against the government accumulating Bitcoin. It's meant to be a peer-to-peer form of money or form of savings, and it's decentralized. And I don't want government adopting Bitcoin. I want the people adopting Bitcoin.
Right.
So I want it in the hands of the people, not in the hands of the government. And I want the government, whatever it gets, to put as quickly as possible into the hands of the people. So I in my opinion, anyone who claims to be a Bitcoiner, who doesn't ascribe to the view that Eric and Korok, we all three of us seem to share, I think they're frauds. So I think they're grifters. I think they're frauds. As I think Michael Saylor is. Given the fact that he wants to more heavily regulate the Bitcoin area, and he made statements against how horrible it is for people to custody their own Bitcoin. So because he wants to custody it all, that's his commitment to decentralization, is him being custodian from almost everybody's Bitcoin. Okay, because people don't have the capacity, the intelligence, the willingness, or maybe everybody's a criminal if they hold their own Bitcoin, and the only way to prove you're not a criminal is to have Saylor or Fink or whatever Wall Street gangster wants to come and get fees to collect things that people can easily do on their own without paying fees to third parties for. And I don't remember reading in Satoshi's white paper, on the whole point of this was to eliminate intermediaries, not to add a whole section of new intermediaries or the same intermediaries. Yeah, Satoshi said, you know what? Wall Street doesn't have enough products I want to innovate a product that I want Wall Street to use. So this is not really real peer-to-peer currency. I'm designing a product that I want Wall Street to run with and that I want the government. Satoshi put a lot of effort into design that was a peer-to-peer design that eliminated the need for third-party entities and would be resistant to government intervention. So if that's the whole concept of the design, then now I want the government to have a strategic reserve and have everybody buy through third-party regulated wallets. Okay, that's a complete contradiction of some of the motivating factors behind the design of Bitcoin. So nobody can be a true Bitcoiner. Nobody can really believe in the Satoshi white paper. If they say this garbage that they're saying, they're just using it as another speculative asset. That the only attribute that they think is interesting to them, is its monetary policy. So, the limitations on how many tokens that can be printed and its scarcity, and that's the only value that they really like in it, is its monetary policy and its scarcity. So, I'm clearly all three of us are well in agreement. I don't know if you agree with my litmus test or not.
I mean, I definitely have. I've written a lot about. You could kind of qualify it as intermediation within Bitcoin. I think the fundamental issue that we realized, and it's been known for a long time, is that to create the economic efficiency to have a form of money that can function for all monetary use cases peer-to-peer requires centralization to some degree. And in cryptocurrency, particularly in the earlier years, or at least in the middle years, was a lot of experimentation around degrees of centralization of the Bitcoin model and expanding use cases for other monetary functions. I think the reality is that we couldn't really architect something that wouldn't ultimately lose its permissionless nature through doing that. And decentralization is a spectrum, but permissionlessness is not. And we can have a fundamental base layer that's a permissionless peer-to-peer network. But for that base layer to serve all monetary functions, there's other infrastructure and technology that's needed to do that. And the Lightning Network is a great example of how we can do that in a peer-to-peer fashion, and we can still maintain the vast majority of trustless properties that the base layer holds. And there's quite a bit of research and development that's been done around trying to solve this fundamental problem of how do we enable more efficiency by optimizing Bitcoin for another monetary function through a separate protocol, and do that in a way that isn't not just that it works. I talk to developers all the time, and a lot of them think from the framework of this works, we can actually do this. And it doesn't matter if something works. What matters is if it's competitive in a market and if people are naturally going to choose and adopt it. And that's one of the harder problems, is that I think even participating in a peer-to-peer manner on the Lightning Network, the marginal cost of participation is not nearly as competitive to the average consumer as centralized financial service providers are. It's much simpler, it's much cheaper, at least from their perception, it's much cheaper. And until we can create more decentralized protocols and products that enable all those similar guarantees of trustlessness to participate in it, until we can create those and they're competitive with centralized services, we're never going to get the marginal consumer to ultimately adopt them. And that's what a lot of what we're trying to do at our firm is we're trying to create ways and help build infrastructure that can make that more seamless. But a lot of what we look at too today is I have all these ideological beliefs of what I want Bitcoin to be and where I think it should go, and the type of free open system that could ultimately emerge and self-regulate through a competitive environment that's informationally transparent. I believe in all those things. I think the reality is that in the current environment in which you actually have to build a business, there's a lot of scaffolding that's going to be required for us to get there. And that's what the market's choosing right now. So the question is how much more rapidly can we build some of this infrastructure to enable it? I'm not of the perspective that all financial intermediaries will be bad. I think one of the most interesting things is just simple multi-signature custodial technology. I think we have yet to see how expansive these multi-signature schemes can ultimately become, because we took like an escrow type agreement and we made it much cheaper to implement in like a peer-to-peer manner. And I think that shared custodial models is going to be a really innovative custodial aspect. And we can solve a lot of the problems. We can have financial service providers who don't have custodial control over things, but can still support other more ancillary functions. And it's models like that are kind of the ultimate goal. Is we want to know that in a doomsday scenario, our money is ours and we can do what we want with it. But I would like to economize on my time, and I would like to have other people manage it. I just want to know that I have a kill switch so that I can pull out if anything bad is to happen. And I think there's going to be a lot of innovation in those respects around it as well. So while like that world isn't necessarily peer-to-peer cash, I think that world can remove this conflict of interest between principal and agents that kind of exists inherent in how our current financial system works. So I think there's going to be a huge economy. And the last big piece too is the fact that we do have peer-to-peer solutions, and while the upfront cost of participating in those is much higher, and the experience requires much more education. For the first time in history, we're actually going to have a competitive substitute to a custodial financial system, or at least, the first time in modern history. And that's something, that competitive dynamic, I think, will make service providers and intermediaries, it's going to align their incentives to be much more in line with consumers, because people can eventually say, you know what, I am fed up, something bad happened. I'm going to go spend 500 hours and I'm going to be very sophisticated with how I operate independently in a peer-to-peer system now. And I think that as education grows over time, in the same way that because computers provided so much benefit to an individual's life, it got integrated into our education systems, and people did spend the amount and effort necessary to actually use a computer to participate in that new online economy. And I think something similar will happen too in the future, where, actually being able to learn how to use peer-to-peer technologies and understand your finances, which for whatever reason isn't integrated into like basic education systems, that'll be something that becomes more integrated in our education over time. It'll become much more natural for people. So there's a lot of favorable dynamics that I think lead to a growing peer-to-peer market, and then a much better functioning competitive market where there is trust involved.
When I was listening to your answer, Eric, it made me think. One is, I don't even know why people want regulation. I mean, I co-authored a paper. The paper was actually my idea to write, but I figured that the only way I would actually have anyone publish it was if I had a co-author that had gravitas. I like to consider myself as a person with gravitas, but the marketplace doesn't seem to agree. But so I co-authored a piece that was published somewhere. I just don't remember where. With Thomas Phillipson, who Korok might know.
Yeah.
At the University of Chicago, since both Korok, Thomas, and myself are all have affiliation with the University of Chicago. And what the point of the paper that we wrote was that summer when we saw both the bankruptcy of FTX, SBF's entity, monstrosity, and Celsius. And when we saw that bankruptcy, there was zero. We had the two. I guess FTX was the largest, or second largest, or third largest exchange, and Celsius was the largest alleged DeFi platform. It really wasn't a DeFi platform, but I think they branded themselves as that. And there was no contagion whatsoever. So no public money was allocated, and there was no contagion, and the world didn't end. Just people who made wrong investment decisions suffered the consequences of their absence of doing sufficient due diligence. I think many of the people who invested in FTX pretty much have tacitly acknowledged that they really didn't do much due diligence. From what some of the things I've read about what people have said about their engagement with Celsius, they never really read the terms of service of Celsius and didn't do the adequate due diligence before deploying money there, and they suffered the consequences associated with not doing that due diligence. So to me, I don't see any utility in regulation. I think consumers, in the absence of regulation, normally what we have in regulated entities is who gets bailed out are the most sophisticated investors. I mean, the unsophisticated investors are covered by deposit insurance, but ultimately the bailout doesn't cover just insured deposits. They end up covering uninsured deposits, and the uninsured deposits are basically people who are accredited and deemed to be sophisticated financially. So, here we have a situation where the average depositor gets a lower interest rate at a bank to not only insure themselves, but they're getting a lower interest rate to also insure people who are not paying for deposit insurance, yet getting insured, who are sophisticated investors. Yet in the crypto industry, most of these people doing this stuff were probably fairly sophisticated investors who suffered the consequences of their own negligence. So then that's how we want markets to function. So it seems to me there's an argument. And what happened after that is that platforms that were deemed more legitimately like DeFi platforms, money moved into those platforms, so people got smarter, and they got smarter quickly. And then more people started taking their tokens off exchanges and self-custodying. So the market got fast. And then the other exchanges said, holy shit, what do I do to make people feel more confident that I'm not the next FTX? So everybody, instead of saying I don't need to do anything because I got the government writing checks, sat back and said, I got a marketplace that might all move their tokens. So how do how do I respond to them? Because I don't have a government guarantee. I don't have a lender of last resort. I don't have access to the discount window. All I have is accountability to the marketplace. So I got to make sure I respond smartly and quickly, because if not, I will lose business. So it seems to me, that the few bankruptcies in the industry, which were very big companies, demonstrated that the government didn't need to intervene at all in the process. There was no contagion and no use of taxpayer funds, to bail it in, while the other entity, the Silicon Valley Bank, required, government intervention, government money, and that's regulated. So we had the deregulated entity, no contagion, no impact. The regulated industry were bailing out the most sophisticated investors in the world. They were getting bailed out, while they would not be bailed out if they invested in FTX. And why people think these very sophisticated investors, depositors, should be bailed out in SVB, but not bailed out in FTX, seems to be like a form of discrimination. But it shows better that the public is better served with a deregulated industry, not a regulated industry. And maybe to the extent that would then encourage third parties to go out and acquire insurance to make depositors feel comfortable on market-based transactions. Eric, Korok, you want to comment on my observation?
Yeah.
Well, all of that is consistent with how government bailouts have always worked. I mean, the great financial crisis was really no different, and you and I have talked about that. So,
Right.
I when I was there, when I was in the Bush administration, our team was always advocating for no bailouts, for market responses. Let the market respond to what happens. Partly because it's impossible to foresee the unintended consequences, and because bailouts by definition transfer money from the poor to the rich instead of the reverse. So yeah, I mean, that's I think everything we saw in the last crypto cycle was completely consistent with. It just showed how the bailout policy it's a flawed mental model.
Eric, you have any comments on that?
Yeah, I think the hardest thing that we'll expect to continue is that for financial institutions to emerge outside of this system, they now have to be competitive against this entire system that does have access to a discount window. And it's an impossible task to ask a financial service firm to compete against a bunch of guys who have this conflict of interest where they can pursue much riskier behavior because they're given a guarantee that they're going to receive a capital infusion, and the costs of that capital infusion are going to fall on the general population through inflation over time. And that's that. I mean, that's the worst part about it is it's not like a truly free system like this. For it to function well, it needs to exist in somewhat of a vacuum. Otherwise, when we have these other competitive mal-aligned incentives against the conflict of interest between the institutions and society, it's too hard to compete against, and they're going to have to opt into more risk-seeking behavior to be competitive against them, and or they just simply won't, and that's like the true tragedy of it.
Yeah, I've made the same point. When people talk about DeFi and DeFi, growing, I just don't see how you compete, with entities that have such a low.
Peer-to-peer is going to have such a hard time competing against it. That's the worst part.
The cost of capital difference is huge.
Yeah.
But the cost of capital difference doesn't exist because of the market. It exists because of government giving preferential treatment to one entity vis-a-vis another entity. So it's an absence of a level playing field, that is adversely impacting innovation. Okay.
Right.
So
Jeff,
go ahead, Korok. Sorry.
Yeah, one point I want to make about your earlier point about decentralization, and I was also similar disappointed with some of the Bitcoin community. I don't know if I'd call them frauds. I would not if I'd go to that level, but I would say I was disappointed because I think they, at least with and not so much with the bailouts, but at least with the idea of the strategic reserve, they had thought of decentralization purely on the monetary side, saying that we shouldn't have a central bank picking the money supply, but they didn't go to the level of on the fiscal side as well, that you should maybe not have a government buying Bitcoin. So that I think was the mental leap that they weren't willing to make. I'm an optimistic person, so I'd like to think that with enough education and persuasion, the Bitcoin community can get we can get them on the right path.
Well, I'm glad that the two of you are each focused on providing that education and information, so you continue to do the good fight. I mean,
Yeah.
I was, in around 2016, 15, back then, I was speaking a lot because my intentions were, and I'm someone who didn't have a business. So I was not speaking at conferences so I could be an influencer and I could make money as a business. I was doing it because I believe that I will not live in freedom and liberty, if we don't. Our founding fathers said tyranny is guaranteed if the government has any participation in the role of money. Okay. So
Right.
our Constitution, and most people don't understand, don't know, because most people don't read the Constitution, don't know anything about our history. Clearly Elon Musk doesn't. From his press conference the other day, he seemed to not understand that there are actually three branches of government in the U.S. Constitution, not just two. I think he's acting as if there's only one branch, but there are three branches, and the government and the founders were very concerned about the centralization of power, and Ben Franklin said that he was skeptical there would have even been a revolution, if it wasn't for the UK, the British imposing bad, unsound money on the colonies. So it was the concept of unsound money that was a key factor, and for at least people like Benjamin Franklin, to say it's important to have, a revolution and escape from that. And one of the reasons why the Constitutional Convention was convened, the main reason Madison convened it, because it was Madison that pushed for the convening of the Constitutional Convention, and he convinced George Washington, who was president of it, was the fact that many states were printing fiat money, and he wanted to end the printing of fiat money, which is why the Constitution defined money in terms of silver and gold. And at that point in time, when they referred to the dollar, that dollar was actually a Spanish mill dollar. The only U.S. dollar was called the Continental. And that was hence the saying it's not worth a Continental, which means it's basically worthless. So nobody wanted to hold the U.S. issued fiat money that was issued during the the fight of the revolution. What people wanted was the best form of money at the time, considered amongst many forms of money that existed, was the Spanish milled dollars. And that we either sold silver or metal, and the exchange rate was supposed to be fixed. So the government never had any discretion, could have any sort of discretionary monetary policy. So for people to get up now and applaud, the government having, people should not be calling that. People should be calling that a shitcoin conference, not a Bitcoin conference, where people applaud the concept, of having a strategic reserve. And going back to this issue that Eric also raised, I'm a big believer, that you hold your Bitcoin, you spend your shitcoin, and anything that's not a Bitcoin is a shitcoin compared to Bitcoin. So Bitcoin is the hardest form of money out there. Any other form of money is an inferior form of money, and that's what you should spend, and you hold on to your Bitcoin. I want to ask you both a question. Do you consider stable coins crypto?
Oh, that's an interesting question. By the true definition of using cryptography to represent value, yes, it is. It's the first largest, likely to remain the largest, I would suspect, use case of representing assets that exist somewhere else in a cryptographic form. So
yeah, I would as well. I would represent. I would say they are definitely in the crypto world. I'm probably a little more negative on them than are most people. I know there are, like Tether, for example. The Tether community is very, very. They tend to be pro Bitcoin. What I will say about, I think the danger of stable coins is that I think if if the world starts adopting them as a medium of exchange, it sort of ossifies implicitly the fiat system rather than shifting more people onto Bitcoin. And so I'm not advocating for any regulation against stablecoins, but I am encouraging and working on trying to amplify the power of Bitcoin to ultimately displace stablecoins. The best example I have this is what I'm working on most intensely is integration of Bitcoin with AI. And the main competition here is not really other altcoins, it's stablecoins. So what's happening is that the AI startups in the Bay Area are all building platforms for stablecoins to integrate with AI agents. That's kind of the default. And they are the market leader right now. I mean, I would say, Lightning still has a ways to go to compete with some of the platforms that are already integrating AI agents with stablecoins. And so what the Bitcoin community needs to do is recognize that this is a big opportunity and we need to play in this space and make sure that Bitcoin is front and center and the world doesn't just shift to using stablecoins permanently, which to me in the long term would hurt Bitcoin's mission if everybody just settled on stablecoins forever.
So here's my take on that, because I agree. It's just stablecoins are this de facto expansion of the Eurodollar system into the digitally native system, and I agree with all those points. But I think the lens that I view it from is we already have proliferation of the dollar system, right? And the question's, well, what's the alternative? If the marginal user who's now participating in this because stablecoins are providing them the functionality that they desire, those marginal users, if stablecoins did not exist, then what would they be doing? And I think the answer is that they would just remain participating in the fiat banking system as is. And I would argue that while it does increase the amount of dollar representation within our digital system, the alternative to that is just that demand remains within the non-digital system. And therefore, I think that transitioning from a stablecoin into Bitcoin is a less frictionless process than trying to get your money out of a bank account into Bitcoin. So I think that there's some sort of marginal benefit there. And ultimately, as long as we're at least in a digitally native system, and it's going to be much easier for you to send your stablecoin to a DEX and convert that into Bitcoin over time, and there's going to be, generally speaking, more free and open markets around it, I view that as incrementally beneficial. And because the argument against it, I think people the argument is, well, stablecoins might cement dollar value within our digitally native system, then I think that argument implies that people will demand dollars over Bitcoin over the long term. As long as Bitcoin remains better money and we have people moving capital to a lower friction system to transition into Bitcoin, I view it as an incremental benefit.
Yeah, well, I'll give you my opinion on the stable coins. I loathe them, and I loathe them for various reasons. One is that the most successful stable coins are basically, have U.S. dollars collateral. So basically, how I view the stable coin is it's actually expanding the reach of the dollar and expanding the surveillance system of the dollar. So I think it's really expanding centralized power through surveillance and dollar hegemony. So because there's really been no other stable coin that I know of that's really scaled that to the size that the ones that are collateralized by U.S. dollars. So, and they're all heavily cooperating with reporting all the activity, with the U.S. government. So the U.S. government probably knows more about the people who hold stable coins than they know about people who are depositing money in banks. So they're probably doing more, better surveillance and over more people, who they normally would have no surveillance over, because they might not be Americans that are holding these stable coins. So I think they help facilitate dollar hegemony and surveillance, and make the surveillance state and empire building, more efficient. And so that's not appealing. That's not very appealing for me. Going back to the point that Eric, that you made, as far as that there might be marginally easier or somewhat easier, to move from Tether into Bitcoin than from your bank account into Bitcoin. Today, that's true, but there's no guarantee that as more people adopt Tether, that at some point in time the government might regulate them and make them regulated intermediaries, subjecting them to OCC oversight, and subject them to the same type of withdrawal rules as banks are subject to, and the same type of KYC. So I think people always have to take a look at how much interest the government has in regulating something, at one scale, and then when it reaches a very different scale, on the relationship that entity that scaled significantly more has in their relationship with the government changes. So and I think that who's the head of the crypto thing? Is it Sachs? Is that the guy?
Yeah.
David Sachs, yeah.
David Sachs. So yeah, you have basically a Silicon Valley venture capitalist who are lauding government partnership with Silicon Valley, in building drones and significantly increasing surveillance and reporting things to the government. So the values of these Silicon Valley people are very different, than Satoshi values. So I think they're completely in conflict with Satoshi values. And I would bet that all these people working in DC today, who are involved in the crypto space, probably hate everything Satoshi represents. So so that would be, my guess and my bet, with respect to, what we should expect from this administration and the proliferation of stable coins. So
Well, one thing,
stable coins are only stable with respect to themselves. If the dollar is not, if the purchasing power of the dollar is not stable, then the main function of the stable coin is not to be stable with respect to itself, but with respect to what you can buy with it, and it's not that stable with respect to its purchasing power. So I don't even like the name stable coin. I don't like calling it through crypto just because they're cryptographic signatures. I think they're all just financial engineering. That just is good for expanding dollar hegemony, which I'm strongly against, because look at what dollar hegemony produces. Dollar hegemony produces trade wars, and other intimidation tactics, that are used if people don't use the dollar, right? That's what this administration has talked about. You want to, the BRICS, you threaten the dollar, 100% tariffs, 500% tariffs, 1,000,000% tariffs. So I mean, look at what we do as the dollar as a weapon, and the question is, do we really want to have even more dollar hegemony than we have today? I don't see how a Bitcoin, would welcome, even greater, dollar hegemony, and ultimately, I don't see, significant benefits, because I think if it's much more scale to, to stable coins, they'll be regulated just like banks, and they'll be held to the same regulations and the same transaction costs of moving from stable coins into crypto will be no different than moving fiat into crypto. So I think whatever benefit that exists today, will disappear, through regulatory interventions. Now that's my opinion. So two things I'll ask you. One is, if you have any significant disagreement or any disagreement at all you'd like to express, now's your time to do it. And then my other question to each of you is, if David Sachs gave you a meeting, what would your conversation be with him? So go ahead.
Yeah, I just think that any argument against stablecoins to the users that are participating in that market, their alternative is basically participating in the banking system. So I think any argument against stablecoin should be an argument of why it's worse than the banking system itself. If not, then I'd view it at least as a neutral expansion of the dollar system. I don't think it's just new dollars are being created necessarily within all this. And I think every dollar that is moved into a stable coin is the activity occurring with that is activity that's now not occurring directly within the banking system. So I view that as an incremental benefit around it. It's not ideal. I would love for all of those users to be people that want to participate directly in Bitcoin, but I agree. Like Tether today, they can blacklist people. That all exists. But I mean, like just from a practical standpoint, what you will be able to do, even under a blacklisting type scenario, you have drastically more freedom holding a cryptographic signature on your cell phone from Tether than you do from having to go walk into your bank branch to send a wire. Like there's quite a bit more control and surveillance, I would argue, that exists within our current banking system. And Korok probably would have a more detailed opinion on that than would be able to than exists within Tether's peer-to-peer structure. And I think it could be likely to exist because everybody still gets to hide behind an IP address and a cryptographic signature. I think in banking, it's much more onerous, and it's going to be a lot harder for them to actually push some of that as well.
The point you made about, eliminating the bank, that point I completely agree with. I mean, that to me is the major utility of quote a stable coin, is that you can engage in transaction without requiring the permission of a bank. As you say, you do require the permission of Tether, because they do censor transactions, but they censor a lot less than banks do. And if it's not uncensored, which it has a higher probability of not being censored, it's much easier to facilitate transactions, in Tether. So I definitely, as of today, I think Tether has more utility than a dollar does. For that reason, is that you remove the bank from the equation. But as I said, ultimately, I think as more people do that, adopt it, that basically the same type of inconvenience that you have with a bank, you'll eventually have dealing with Tether. I just think today that's not the case, but I think eventually it will be the case if there's significant more scaling.
Yeah, I'm sympathetic with Eric's view, but I have to say I do agree more with Jeff. Just I do see this implicit danger with the expansion of the dollar hegemony through stablecoins. I think part of the problem is that technology is path dependent, and people can transition only so many times. And so, if they do transition over to stablecoins, my worry the downside risk is that they stay there and they don't make that next leap to Bitcoin. And I don't think I think as a Bitcoin community, we can be more ambitious and say, let's just try to get people onto both a digital version plus a more secure money supply and a more limited money scarce resource than the dollar. So we should kind of aim to do both at once. Yeah.
I just think as long as the dollar does things that the dollar does, and as long as Bitcoin continues to do things that Bitcoin does, I'm thinking that within the next 5 years is when we're going to hit a major inflection point in Bitcoin adoption. And I think that that'll be enough time before stable coins will ultimately cement. Because I just think that an argument that people won't transition from stable coins into Bitcoin over time is just an argument that people would prefer to have their wealth continuously inflated. The case to transition into Bitcoin gets better and better every year as it gets more stable and credit markets mature and its market cap increases. All these variables that are more dollar-like become increasingly more competitive in Bitcoin as time passes. But it's fair. I think it's an unknown frontier. There is a possibility that stablecoin adoption cements in some sort of, massive proportion of global dollar denominated representation. And people are ultimately put into a de facto banking system within this new digitally native construct. But the problem is if all of the onerous monitoring, regulation, control were to be implemented into a stablecoin system, I would argue that would just undermine its utility in the first place. In which case, people are just better off still participating in the banking system. It just wouldn't be much more efficient to do all of those things. And then if they're already going to be participating in the banking system, it's it's kind of pari passu. Nothing's really changed here. And the only people under that type of a scenario, the only people that would have been able to exit and get into Bitcoin anyways are people who probably pulled out into cash and were doing it in a black market or something. So like when I view the doomsday scenario, I basically view that doomsday scenario as being as bad is kind of how the current system works. And unless the ability to transact for people who, haven't been qualified as terrorists or whatever that is, unless that ability is removed, I'm confident that people will choose Bitcoin over the long term.
Yeah. So going back to my other part of the question is, what would the conversation have? But before I get to that question, do any of you know, like the people who are part of this now crypto regulatory oversight within the Trump administration, how many of them really own any material quantities of Bitcoin, or are these people who have been, non-Bitcoiners mostly in the crypto, into the ICO, crypto stablecoin space, and are non-Bitcoiners? Do any of you know I don't know if there's any reason why you would know. I don't know, but do you know?
I don't know them personally. I just kind of know what's on the public record that Lutnick is probably the biggest Bitcoiner on the team. My recommendation to Sachs, if I met him, that he would first spend more time with Lutnick and first understand Bitcoin more. I would say that's the majority of what the biggest lessons could come from that. And then I would say there's an opportunity with merging Bitcoin and AI, which is part of Sachs's mandate. He's the AI and the crypto czar, and there's an opportunity there that he should think about. And there's a lot of new technology in Bitcoin that makes it a good fit for AI agents. We're doing a lot of research on that in our lab that I think can unlock some of the future potential of Bitcoin to win on technology, not just on sound money. For me, I'm willing to get whatever it takes to get people onto Bitcoin. Let's do it. And if that means coming up with new ways of transacting, new kinds of complex taproot scripts, then let's make it happen.
Mm-hmm. Mm-hmm.
Eric?
Yeah, I know that. I don't know any of them personally. I know that David Sachs is one of the major investors in Solana, so I think that's going to be impacting, to your original point, Jeff, the policy very significantly. I think that like some people in the community think that we've seen kind of like one of the last major boom and bust cycles for crypto more broadly. I don't think that's over yet. I think that we are starting to see a more significant decoupling between Bitcoin's capital appreciation and the rest of the crypto market. But I think that once some of this regulation comes, it's going to be a lot more favorable to crypto, and it's going to allow for, whether securities or whatever you want to call them, to be trading more freely, which honestly I'm a proponent for. I believe in free and open markets. If people want to go gamble on meme coins, I want people to be able to go gamble on meme coins. I just don't like deceptive marketing that occurs around a lot of this. That's actually my favorite thing about meme coins, is that it's being called what it is now.
Yeah.
And that's awesome. It's not some sort of new futuristic tech that's going to change the world. And people thinking it's an actual investment. Now that people know what they're truly doing, and it's just like, we just have an emerging gambling market. And and that's a good thing for free markets over time.
Yeah. So what you just stated, I mean, I know very little about Sachs, and I really don't have much interest in knowing. But again, being a Bitcoin, I don't really care very much about what any of them doing, because I don't want their help. I just don't want them to impede, and I don't think there's anything they can do to really impede. That's materially adverse in nature, that concerns me. So but I'm not looking for help. The crypto industry is looking for help. I don't think Bitcoiners need to look for help. Because Bitcoin has attributes that are so overwhelming, and was designed in such a way, that would be, anti-fragile with respect to the government. It was designed to not need help, while crypto obviously needs the help, because they're lobbying, and they'll probably have a receptive ear. And my experience with the crypto industry is most of the crypto industry is actually pretty hostile to Bitcoin. So, even though they all want to benefit from the affiliation with Bitcoin, to the extent that Bitcoin has scaled and has been very successful, and people know of its success, so they like to link it because they help it facilitates them and their what Eric you just referred to as their like deceptive marketing practices, which has been basically. I think it's grifters and scammers and engaged in really horrible deceptive marketing practices. So I don't want help from I don't want help, and I don't know. Are there groups out there? I mean, I know there's these Bitcoin Foundation or something. Is really any real Bitcoiner lobbying government for asking for anything, or
there's the Bitcoin Policy Institute, and Satoshi Action Fund.
Yeah.
And I'm probably forgetting a few, but I think that there are.
And what are the things they're asking for? What are they looking to accomplish through setting up these entities?
Satoshi was trying to loosen regulations for miners across different states. Then they sort of got on this kick with trying to get every state to adopt a strategic reserve, which is a little bit different than their original goal. Policy Institute, I think they just hold conferences. I don't know if you've gone to those, Eric, but I haven't kept up with that.
Got it. Okay. Yeah. I wasn't sure.
Yeah. But yeah, you're right. The Bitcoiners are not lobbying to the level of the crypto community. Yeah. From my vantage point, it is a little. I see on the academic side, I see the influence of the crypto world on the academy and on thought leadership. It is a little unfortunate that they have so much. I mean, the money does permeate the universities too. I mean, the research agendas, the problems. The amount of volume of work, the amount of volume of thinking that's on for proof of stake versus proof of work is totally out of sync with economic. Just look at the market capitalizations, and it is a little disappointing. Yeah. But what can you do? I mean. That's I would say that's the worst part of my job is the association with the crypto industry. It's just the fact that when you talk to people and you tell them you work in Bitcoin and the conversation just immediately moves to Trump coin or whatever, there's just a lot of explanation. So I am optimistic in the long term, but in the short term, we sort of have to hold our nose and put up with this, I think, while I have this association. Yeah.
What do you think, Eric?
I completely agree. I have the same perspective. It's just a reality that we have to be dealing with. I've kind of broadly viewed a lot of what's happening in crypto as just like a sandbox for things that are going to emerge in separate protocols on top of Bitcoin. I don't think that it's all just like scams, gambling, and crap that people are representing. I think that valuable insights have been found, valuable cryptographic structures, different protocols. There's interesting things that have been found through R&D, but it's not completely R&D. Retail's financed a bunch of it unknowingly, and but I don't throw the baby out with the bathwater with some of it. And I think that when it comes to scaling Bitcoin to become, my view, which is the ultimate goal here, it's what makes me find purpose in the industry of creating the first neutral monetary system that's apolitical. When it comes to that, I think that there's insight into what was found in some areas of crypto that can help with that process over time.
And you, Korok?
Yeah, no, I would say, I am, like I said, I like to be optimistic. I do believe, I think Eric and I share that view that over time, the best technology should come over to Bitcoin. Some of the most interesting questions now in the development phase are about scaling and how exactly to scale. And do we have should we have side chains? Should we have a soft fork with covenants? Is BitVM an alternative solution? These are really interesting. I think some of the most interesting technical questions today. And then the other area which I'm personally most interested in is how do you bring machine intelligence into Bitcoin, which really no one has done this even across the other cryptocurrencies. The AI agents are just sending payments, right? But they're not using any of the underlying structure of Bitcoin, which is really taproot unlocks with these giant Merkle trees that can be very complex, hosting all kinds of scripts and data. It's a huge opportunity, I think. And that's why I'm optimistic that Bitcoin needs to keep winning on technology in addition to sound money.
Yep.
How would you explain, in language that somebody who's unsophisticated with respect to the terminology, to people who hopefully will be watching, our conversation, how would you explain to them that what would be the benefit to them of a world as you would like to construct the world, as you'd like to see the world constructed? What do you think would be the tangible benefits they would see in a life as a consequence of both of you being successful in your ventures?
Yeah, I think you can imagine a world one day where you have complete autonomy over your bank account. Everything's just run, and you also can you have relevant assurances if something goes wrong. I think that there's a world where you control your money. If you lose your phone or your computer or anything like that, there's assurances to where you haven't lost your money, and you can send it to anyone, anywhere in the world instantaneously at practically zero cost for whatever reason you want. And I think that if we live in a world like that, things are going to change very drastically.
Yeah, and I would agree with all of that. And I think to me, the censorship resistance and the notion of ownership and property, which is so embedded within Bitcoin, is so powerful and so novel. It's it does take time to really understand the full consequences of how it will transform freedom, property rights, human behavior, life choices, financial planning, all of it. It's a massive idea, and it does take time to adopt. I tend to be, on the educational side. Obviously, this is most of what we talk about in my classes when I teach it. But I do believe that the world, we live in a technology mediated world, and the people respond to markets and technology. And so that's why I started to beat a dead horse, keep hammering the point home that realistically, the way I see Bitcoin adoption happening is going to be through technology, and maybe I'm a little skeptical on the ability of us to just persuade people on sound money alone to win the war. We have to have the best technology and the best features, and so that's why we need to be front and center on the tip of the spear with technology, so that Bitcoin is actually the best technological solution as well as the best monetary one.
Yep.
Yeah.
I've never really focused so much on the technology side. For me, I'm satisfied with the soundness of money, and that there's nothing that comes even remotely close to having the attributes and virtues that Bitcoin has as sound money. And I think, conversations I've had with both of you, is my kind of skepticism that all the other attributes that you would like to see become part of the Bitcoin ecosystem, I think, are attributes that are easier for the government to regulate and are hard to be preserved as permissionless platforms. And so I think the benefits will be significantly diluted by government intervention. But I certainly admire and respect the effort you're putting into it, because in spite of my skepticism, I'm happy somebody's trying to do it, and I wish that they succeed, because I think we'll all be better off, if both of you succeed, and so many others who are putting sincere efforts, and have success. I tend to not allocate much time and money to things I don't think will be successful. So, my bet is that it will not be very successful, but I could be wrong. I've been wrong frequently enough that I'm not always right, and in many cases, I hope to be wrong, and this is a case where I certainly hope that I'm wrong. So I think that I think one of the things that the founders understood very well is that one of the main ways of preserving individual liberty was to separate government from money, and that it was really impossible to preserve liberty in doing so. And when we had sound money, when we didn't have government money, we had very limited government. And so as government grows, liberty recedes, freedom recedes. So, in 1913, when we got the Fed and we got the income tax and we got the direct election of senators, total government spending was like 6% of GDP on all levels of government. Now total government spending as a percentage of GDP is 40%, over 40% of GDP. So that the intrusion government has in our lives would be very unlikely in a world where there was a separation of money from the state, and our founders understood that. Unfortunately, today we don't understand that. How much of the efforts that you make in trying to convince people do you make, the arguments that I like to make? Do you find them compelling or disinteresting or what?
It totally depends on the person. Well, the one thing I always try to do whenever I get into a conversation around Bitcoin with people is ideally I can play stupid before we have a conversation and they're not really aware of what I know about it. And then I can get their perspective out of them. And that helps me address what they're actually thinking. For the average individual who doesn't know or doesn't care, I talk about how it's a way to get more money over time. And we can start kind of with that. And that's kind of more intriguing. And here's how people's lives get changed by it. And then I think a lot of the more fundamentals in learning kind of stem from that. For a lot of the conversations I have in the world that I'm in, though, not as much the average individual, but the average investor, like the family office type or the traditional, a CFA or, a value investor, that type of framework. That's when I really like to hear their arguments. And it's always very standard FUD that's been around for a long period of time. And as a result of just not understanding the asset. I think the biggest thing is a lot of these conversations I have are with guys who are much older than me. So usually they don't want to have some young guy tell them how to think about Bitcoin. And so those are always a lost cause. But of the ones that aren't like that, it's usually all the data's on our side now, right? Like we look at the adoption metrics, we look at it outpacing all these, massively impactful technologies in current of adoption right now. We look at its price appreciation over time compared to all other asset classes, outperforming it in like at least measurable history. And then we can look at that on a risk adjusted basis and make the same argument. I mean, all of the data points towards something. It's impossible to say that something massive isn't happening here. And the time horizon's been long enough to where the tulip argument or the Ponzi scheme argument just doesn't make any sense anymore. And then now we have all the social proof of political institutions that a lot of these demographics are typically looking for in their investments. And if they're still against it at this point, it's usually just because they're not aware of all those things. So I go into tangible proof. I don't try to explain history or sound money to them. And then that usually opens them up to think, well, if all these things are true, and it's very easy to point to the data that they are, then I'm missing something big here. And there's really no way to argue against it right now.
Yeah, I saw a chart the other day that showed internet adoption compared to Bitcoin adoption. And it seems like Bitcoin adoption has been faster than internet adoption.
There's a lot of assumptions that go into that because we're doing an annual report through my firm, and we actually deep dove into the adoption metrics. Funny enough, we actually think they're higher than what people are reporting, and we'll go into all that. But a lot of it too is how you define the pace of if we're accelerating. A lot of it comes down to how you define when internet adoption started and under what numbers, and you can kind of shift it in one direction or another to be comparable to outpacing it. So there's a little bit of play in those numbers, but nonetheless, it's growing at a rate very on par with it.
Korok?
Yeah, Jeff, I certainly, 100% agree with all of, the principles, these principles of Bitcoin that we share. I mean, that's the name of my website, Principles of Bitcoin, for that reason. So there's no distance between us, I think, on the fundamental characteristics of why this has value. I think where we might disagree is what is the best path to adoption and how do we actually get people onto Bitcoin? And what I have found, I guess, from my own experience is that the advocacy, persuasion, education is a long-term but slow process, and that there may be other faster ways to move the needle forward. The truth is, like, here are the facts. Look at just like NVIDIA as an example, a company about accelerated computing that has a larger market cap than most countries in the world, right? Mm-hmm. I mean, we cannot ignore this fact, and that the amount of attention is rational towards this concept of machine intelligence, and that's where people's brains and time is going right now. So I think we need to work inside the world as it is, not just the world as we would like it to be, and that Bitcoin needs to play in that space, and kind of get its hands dirty as much as possible. So that's why I think we really need to shift the conversation towards technology, and I think that might solve some of the problems that Eric faces when you're talking to these people a lot older than you. Is that when you talk about the technological side of Bitcoin, then you really can kind of put them in their place.
Oh, completely. Yeah. Yeah.
Then they
I
realize
like to lead them that direction first, and then I'll be like, "Oh, really? You think that? How does that work?" And then there's no understanding behind it.
Yeah. Exactly right.
Very interesting. As I said, I basically, outside, I'm almost all the invitations I get, I turn down. I basically have decided I have very little interest in doing. I mean, with people like you, I love talking about Bitcoin. It's my favorite topic of conversation, outside of myself and my family, I have more faith in Bitcoin than anything else.
Yeah.
I have significantly more than I have more than 3/4 of my net worth in Bitcoin.
Right.
So I'm not diversified. So
That's what I'm talking about.
Yeah.
I'm all in because
Yeah.
I have that faith, and I don't think, never in my life, I've had times where I've had all my money in one investment, but that was an event play. I thought something would happen, an announcement would happen. I was highly confident and put all my net worth into it. I haven't done that many times, but I've done it several times where I had 100% of my net worth in one bet. That was a specific event that I thought would be triggered and that I would make a lot of money and then I would sell out. So, but it was as a trade, not as an investment. So, but as an investment with a long holding period, I've never had anything that I've bought so much of, that I've held or mined and held on for such a long time, and represents such a high percentage of my net worth, because I believe in not only the monetary value of Bitcoin, but its non-monetary value, and the attributes that it represents, and the world I want to live in, which is a much freer, decentralized world. How much does the messaging regarding decentralization resonate today, or is that a term that now is basically has somewhat disappeared from the people talking about Bitcoin or crypto, with the shitcoiners and the proof of stake. I mean, you can't talk about proof of stake and really be serious about decentralization. So, in my opinion, but it seems to me that there's a lot less conversation about why decentralization is important. Do you have many of these conversations about why decentralization is important?
Decentralization is well, I think what would probably resonate well with you, Jeff, and like our audience is so principal agent problems are one of the most pervasive issues in economy, where you have a conflict of interest of somebody that you have used as an agent to fulfill some sort of service for you. And conflicts of interest emerge when the service or the benefits that would accrue to the agent are more valuable than the value that you can ultimately pay to them. And money has been, because money is the most saleable and marketable good, it's something that has always throughout history had a very high degree of principal agent conflicts over its control. And intermediaries have participated in the control over money over time throughout its production, its storage, and its verification. And what was novel about Bitcoin is that it found a way to decentralize those functions, and it eliminates the need, maybe not the actual demand, but it eliminates the need to have a third party intermediary fulfill those types of functions. And that's what removes the conflict of interest. And, the cycle of boom and bust economies and governments destroying wealth that citizens create can be significantly hindered, if not eliminated, from having a decentralized technology like that.
Well, I think the other attribute to me, and Carlos next, is if it's truly decentralized, not a slogan decentralized, but truly decentralized, not technology is anti-fragile with respect to government. So the only way to have a permissionless, censorship-resistant ecosystem is if it's truly decentralized, because there is no controlling party. So there's nobody the government can call on and say, come in here, I'm subpoenaing you, and you have influence over the ecosystem. No one party has any influence over the ecosystem. There's no one person you could ask, to reverse a transaction, to censor a transaction. Nobody has that type of authority or power over the ecosystem. So essentially something that's really decentralized is the only system that can be censorship resistant, and permissionless. And to the extent that people value censorship resistance and permissionless, and everything is non-reversible. So it's immutable. So if those attributes are of value to people, and I think they should be valued to a lot of people, they should be valuable to most people. You can only accomplish that in a protocol that is decentralized. So those are the attributes associated with something being truly decentralized, as Bitcoin is truly decentralized, as most of these decentralized platform exchanges are not really decentralized exchanges. So they use it as a slogan, but again, that's part of, in my opinion, deceptive marketing practices. So to me, that's a very important virtue, is that, I don't think, if you claim to be a free people who love liberty, you don't expect to live in a world, where you have to ask for permission for just about, doing anything you want. I mean, like you mentioned before, you want to avoid a bank. You put money in the bank, but if people read the accounts, read the terms of service with demand deposits, they're not really available on demand. So, so they're that's not the case. So, so Korok and Eric, why don't you now have your opportunity of giving your final words and having this conversation. I hope you enjoyed. So whatever you'd like to tell people who are watching this, here's your opportunity of doing so. So Eric, why don't you go first, and then Korok, you go next.
Yeah, I think Bitcoin has the potential to become the first neutral system, monetary system, at a globally integrated level that we've ever seen. And I think that the structural changes that will create within a society, and the amount of freedom and freedom of choice, and ultimately the amount of wealth that'll accrue, will be one of the most foundational changes in history. And that's the coolest thing about Bitcoin. And once you understand it well enough, I was a skeptic when I first started. And after spending a lot of time learning about it, you start to realize how big this vision really is. And I encourage everybody to learn a lot more about it.
Is there anything, Eric, that you'd like to say about yourself or your company, or anything else that you'd like to explain?
Yeah, my firm is we're a venture capital firm. We invest in infrastructure around Bitcoin to hopefully bring that vision about one day. And yeah, our website is epochvc.io.
Thank you, Eric. Korok?
Yeah, Jeff. Well, thanks for having me here. So I, like you, Bitcoin is the most profound idea that I've come across in my lifetime, and I encourage everybody to learn as much about it. Just so you can so give some context for me. So I teach Bitcoin at Texas A&M. You can check out my website, principlesofbitcoin.com. I have a newsletter where I write about all these ideas behind Bitcoin every week. I also use that as a way, as my notes for the exploration I'm doing with my research lab on bringing machine intelligence into Bitcoin, which is probably the most exciting project I'm working on right now. And I think it's a wide open space. We have a bunch of students working on it. We have a few papers coming out soon. We're giving some presentations at Stanford next month, and so it'll be it's really exciting to see how we can unlock some of Bitcoin's capabilities with some of the newest innovations in AI. So check me out at Principles of Bitcoin, and hope to stay in touch with everybody.
Well, thank you very much, both of you, and everybody who's watching. I want to encourage you to follow what both Eric and Korok are doing. The people who are authentically committed and passionate and intelligent, and that should have been obvious by this conversation regarding both Eric and Korok. So thank you both so very much.
Thanks, Jeff.
Great, thanks, Jeff.
Bye.
Thank you.